Thank you so much, and good morning, everyone. Thank you for being with us today. So we have today 30 minutes with amazing four panelists. We have lots of topics to cover. We'll try as much as possible to make the journey of the panel about the advantages of IPO, the story of IPO in the Middle East. Specifically, we'll focus on some countries like UAE, Saudi Arabia. We'll talk about how much foreign investors, local investors are heavily thinking of our markets. We're going to talk about bonds. We're also going to focus in our journey on the ESG and ESG impact on the market, and definitely the outcome and the opportunities out of that. Without further ado, I will ask our esteemed panelists to briefly introduce themselves, and then we'll kick off our panel. Basil, over to you.
Thank you, Hala. Good morning and marhaba. I'm Basil. I'm here today representing Franklin Templeton, a global investment company headquartered in California with $1.5 trillion in assets under management. Specifically, I work with a team of analysts across emerging markets from Asia to Latin America on making high conviction investment decisions. Thank you for hosting me today, and it's a great privilege to be with you.
Welcome, Basil. Over to you, Noor.
Hey everyone, I'm Noor Safa. I'm part of the debt capital markets team at HSBC. So we effectively work with issuers across the region based out of Dubai to help them issue bonds or sukuk to fund working capital or acquisitions and so on.
Shukran. Assalamu alaikum, sabah al khair. As the only non-Arabic speaker on the panel, I thought I would give it a go. My name's Alan Williamson, honoured and privileged to be the CEO of Taaleem. We IPO'd in November last year, the first education group to IPO on the DFM. We have 31 schools in the UAE, private and public, very honoured to be part of government education with the government of Abu Dhabi and the government of Dubai and the federal government.
Over to you, Simon. Simon is an Arabic speaker as well, by the way.
Nah.
Thank you. Good morning, everyone. I'm Simon Kitchen. I'm head of strategy at EFG Hermes. We're an investment bank headquartered in Cairo, in Egypt. We have operations throughout the Middle East. My job is to help investors in emerging markets understand the opportunity in public markets in the Middle East.
Super, thank you everyone. Alan, I would like to start with you with the basic, I think, question everyone asks. Okay, what's the advantage of IPO? And if you can share from your experience also, what's the story like, an overview in the UAE?
Thank you. Obviously, in a room full of people who have probably got a higher qualification in economics than I actually do. I humbly suggest that, access to capital, liquidity for existing shareholders, all of those understandable reasons. I'd rather reflect on it from the story of Taaleem. What I see as the advantages was sharpening our strategy. I think actually the work we did with EFG Hermes, Emirates NBD, around, who are we, what are we about, and what's our story. And I think that was the huge advantage of IPO. The second advantage is if you are a private company, obviously you are focused on delivering that strategy, but you may be delivering that for a family wealth fund or a small board of investors. When you are delivering that for a wide range of stakeholders, then the delivery of the strategy is actually hugely important. And again, it sharpens the focus on doing that. I think the final one for us was the ability to allow our staff, our parents, to access the growth story of Taaleem, to be part of the wealth creation that comes from running a profitable company. And we were very passionate about having a retail a retail investment group that included our stakeholders.
Amazing, Alan. Alan, Basil, further to what Alan was saying, IPOs were there to add value to the economic growth. From your experience, how do IPO act as this catalyst for growth? And if you can give us also examples on Saudi Arabia as well.
Sure, thank you, Hala. No, it's an excellent question because IPOs clearly act as a very crucial catalyst for growth, and they do so really through three very distinct stakeholders. The company, the founders, and the new investors coming in.
Absolutely.
So for companies, IPOs first and foremost provide the means to fund capital expenditure and mergers and acquisitions, using their valuable currency oftentimes as stock. It also enhances brand recognition and increases to business growth due to better perception and visibility in the marketplace.
Of course.
And of course, it helps companies to grow because it enables them to retain and to attract talent through stock-based incentive plans. Now, from a founder's perspective, the IPOs actually provide a reliable exit path.
Yes.
And so what that means, it enables founders to recycle and reinvest that capital into new areas and new ventures. Oftentimes, these are more nascent areas. Yesterday, we heard about fintech and food security and AI being the new engines of growth for the UAE. And so these are critical diversification parts of the story. And for founding families, IPOs really support their growth by securing a very orderly transition in their businesses, whilst at the same time enhancing corporate governance standards. Now, the final perspective is really our own. It's the perspective of the new investors coming in. For us, these new IPOs provide very welcome opportunities to be able to diversify our portfolios. Over the last couple of years, amidst a very challenging IPO market globally, we've seen very active IPOs in Saudi and here in the UAE.
Yes.
Now, not only does that really increase investor choice, but it also improves liquidity in these markets.
Absolutely.
Because it brings with it new investors that want to tap into the strong underlying fundamentals here in the region. And if I may, I'll just leave you with one sort of final stat for those that prefer numbers. In the past year, MENA IPOs that have raised over $100 million have on average seen gains of 46%.
Wow.
So these are impressive returns, and I think they speak volumes to the appetite that exists for well-run, growth-focused, and attractively valued businesses in the region.
Super, Basil. Simon, further to what Basil was saying, mentioning investors, mentioning the appetite and attracting, whether foreign or local investors, do you see from your experience that they are investing as it should be? Are they heavily investing or still way to go, or we're lacking behind in IPOs in our stock markets, and why?
There's a huge gap between where investors should be, really, according to the benchmark. So within the emerging markets sort of universe, GCC countries account for 7%, and our survey finds that foreign investors maybe have 2.5% in GCC markets. So foreigners are very underweight. They're very underinvested in these markets. Why is that? I think there's a perception that there has been a perception that the GCC, these are not emerging markets. They're not China, they're not India, they're not rich enough, they're not big enough. There's also a perception that some of the markets here are expensive. And there's a complacency. I think if you're an emerging market investor and you've been investing for decades in places like China and India, and now the GCC is on your radar, you're saying to yourself, well, really, should I be making the effort? Now, that is changing. Yeah. And Basil's statistic about performance is very telling, that if you had sort of taken the plunge and put your money into some of these IPOs over the past few years, you would have made good returns, much better than the returns that you would have got in China over the same period. So, we see people beginning to do more homework, but there is something that can be done here in the region. I think, what Alan's done with his company and sort of taking the story to the market, that's really important, and telling a story, presenting a growth opportunity to the market. But I think also, some of the people in this room can maybe help by some of the plumbing in the markets in the region, just making it at the margin easier for foreigners to put money into our markets. Reducing the paperwork requirements, making it cheaper to trade. All of these things can make a difference and bring money in.
Absolutely, absolutely. If we want to choose out of this bonds, and this question is for you, Noor, like we all know bonds are more listed internationally, but are you starting to see like dual listing or issuers are starting to, for example, promote their local listing hubs? Are you seeing these trends?
So maybe to take that question, I'll address a bit of what was said on the equity side, but more on the debt side. So the debt side's been, I would say, open in the region for a while. We've had years of, record issuances pre-2022. I think the downturn in the economy, the rising rates, debt capital markets volumes kind of went down. They still remained solid. So we didn't have the issue of IPOs of, we're just opening up the market to foreign investors and so on. It's always been open. We've seen a lot of institutional investors internationally look into the debt market in the region. You are right. A lot of these issuances are listed internationally. It's primarily driven by, trying to please international investors who require these listings because of ongoing reporting obligations and so on. In recent years, we've seen issuers here in the region take a view to dual list. So they are trying to satisfy the international investors, but they are trying to promote the local exchanges. This is, to be fair, mostly in the UAE. So we see a lot of Islamic issuers list their issuances on the Nasdaq Dubai to kind of, comply with His Excellency's view of creating it as an Islamic finance hub. You see a lot of the Abu Dhabi issuers, especially the GREs and the government, list also on the ADX to promote the ADX as a listing venue. So I think that will help them grow further. This is it's a bit lagging in Saudi, I would say, or elsewhere, where I think the focus has been mostly on IPOs or on listing equities. But it's definitely a growth area.
Amazing, amazing. Thank you, Noor. Alan, I'll go back to you to related topic, but from a different angle, ESG, environmental social governance. There's different perceptions about this. Some perceive it as an additional checklist which has to satisfy regulatory requirements, and it's an added work and they don't have time for that. Some perceive it, no, it facilitates lots of things and makes life easier. What's the impact of ESG on capital market?
Yeah, interesting perspective on it, and I think you've hit the two parallel or extreme views of it. Again, the textbook answer would be now that you're a public company, there's a lot of risk management around that. There's a lot of investment, very, very proud of the UAE hosting COP. And for example, in Talim, we've solar paneled every single school. And actually, you can make money out of that. And I think that's a crucial perspective. But, as a schools group, it's at the heart of everything we do. And as a 50-year-old man, I sometimes forget, unless I'm in a school, the power and the thinking of the new generation of young children. It's at the heart of everything they want to do. The environment is crucial to them. I've got 36,000 eco-warriors pushing Talim not to have any plastic bottles in their school. And, that's hugely important. And in terms of the social aspect, Talim are very proud that we run our government schools. We are a for-profit company, and we give excellent profits and returns to shareholders, but we also have a heart rooted in the UAE and delivering education to the charter schools here in Abu Dhabi and the Northern Emirates is our social conscience. And finally, governance. I possibly missed that out as an advantage of ESG, strong governance. We were lucky that pre-IPO we had strong governance, but even down to, we're very proud that we have Emirati female representation on our board. And that's important for, 50% of my students are male and 50% are female. And they need to see role models in Talim. Almost our entire leadership team is female. And we're really, really proud of that. And that is all part of ESG being at the heart of what I believe a company should do. So yes, there's that technical answer you gave, but my daughter 25 years old, she won't invest in a company that doesn't tick all those bullet points. And you know, as that generation comes through, companies have to be really sensitive to the fact that a new generation of investors will only invest in a company with strong ESG.
Yes, absolutely, absolutely. I think it gives peace of mind, and ESG trend is going towards the second compliance wave. When compliance you need to have, you wouldn't invest if the compliance requirements are not there. ESG now is actually a follow-up trend for that. Basil, would you like to add anything on the impact of ESG in capital market?
Yeah, thanks, Helen, and thanks, Alan, for some excellent insights. I don't just say that because we're investors in Talim. No, look, for us, ESG is, it's not just a trend. It's not a checklist. It sits very central to everything that we do.
Yeah.
Good ESG is just good business sense. It lowers your funding costs, and it drives value. And for us, sustainable business practices is really inseparable from long-term value creation. So how do we think about this in terms of our investment process? Well, we realize that ESG factors create opportunities as much as they do create risks for companies that we look at. So we seek to evaluate how those factors have an impact on the long-term sustainability of growth and on the asset values of those businesses. And ultimately, in doing that analysis, we're able to identify businesses that can sustain high return on capital and resist competitive pressures over time. We also, as significant investors in emerging markets, we use our vote and we use our management engagement to improve outcomes for all stakeholders. Now, if you look at the empirical evidence, it's quite compelling. Poor ESG leads to lower valuations. And if there's any doubt about that, I'd urge you to look at the example of Korea.
Yes.
In Korea, companies trading have had very ineffective governance and for long periods traded at substantial discounts to emerging market peers. Now, today, and following the inspiration of Japan, Korea and its government are embarking on a corporate value up program which seeks to improve and close the gap of Korean companies as a result of better shareholder return policies, increasing board independence, and better management communication.
Yes.
But of course, you know, ESG extends beyond just companies, and it also impacts the regulatory environment as well. So in China, for instance, volatile regulations have impacted large parts of its equity markets. You know, investors really dislike that uncertainty.
Yes.
Bringing the conversation back to the UAE, I think, you know, there are areas for improvement, but we see signs of tangible progress.
Yes.
The regulator has now mandated for all listed companies to report on ESG factors. We are seeing a renewed commitment to tackling climate challenges following COP28. And of course, it would be remiss not to mention the removal from FATF's grey list, which shows considerable efforts to adhere to best practice.
Absolutely.
And we think that step will ultimately result in long-term benefits for the market, including increased foreign direct investment. So Mabruk.
Yeah, absolutely. Of course, congratulations to UAE being removed with huge, gigantic, actually, efforts in the past 2 years. Simon, if someone in the audience here is planning, it's a new company, building a new company, their friends are, and they want to go public in the Middle East, what tip or advice do you give them in relation to ESG? And do you think like doing this is challenging by itself, and why?
I think you should be realistic, and I think drawing on I think Basil's comment. I mean, to me, what I heard most was commentary on the G, and I think that's the most important thing when you're coming to markets, because I think that's where you can see the clearest link between how a company is governed, is managed, and returns for minority shareholders. You should also bear in mind that, you know, investors in emerging markets, I think they also are realistic that countries that are experiencing an economic transition are not going to have maybe the same environmental and social conditions as developed countries. And so don't come to the market pretending that you are, I don't know, a Scandinavian education company, for example, right?
Yeah.
Of, you know, that you are ticking all of the boxes. Just be realistic.
Yes.
Say, you know, this is our governance. We're fairly transparent. These are the things we're trying to do to be better. But at the end of the day, if you're a company, particularly, you know, maybe from outside the GCC in Egypt, a market that I know well, you're not going to be able to get to those standards. And in fact, if you think about an industry like, you know, textiles, which is an industry that is a polluting industry, there's no way around it. Yeah. But it's also an industry that in the past has brought many people out of poverty. Yes. And brought many women into the workforce. And so there has to be a balance between these things as an investor and as a company.
Yeah, absolutely, fully agree. Noor, in your field, like the debt capital markets, do you see difference from perspective on tackling or onboarding ESG, or it's the same which applies everywhere?
I think, I mean, to Simon's point, emerging market investors do understand that this is a very different region. So they're looking at the MENA region, they're like, okay, they're carbon intensive, they're heavily reliant on oil. So they do understand that when they're looking at an ESG element of their investment, to what my colleagues have been saying, it's a bit different than when they would look for, I don't know, an investment in Europe. That said, I think regulations in, you know, a lot of the bond issuances in the region are heavily subscribed by European investors who are heavily regulated on climate change, but also now on, you know, diversity in the workforce, diversity on boards. So the whole elements of ESG, whether ES or G, are very key for them. So we've seen that in turn come into effect to issuers. So a lot of issuers are thinking about how to tackle that. You know, 2 years ago, we would go on a roadshow and we would talk to investors, and I think we would not get any ESG questions. I think now we're in an environment where every single meeting, whether it's an ESG labeled issuance or not, we're being asked, what are you doing on ESG, and on all three elements. So from the region, we've seen, you know, issuers make a lot of commitments. Thankfully, they've been driven by the government. So, for example, the UAE's net zero commitment kind of trickled down. A lot of their GREs went down that route as well, or made some sort of commitments to reduce their emissions, let's say, or increase diversity, whether away from climate change. I don't like to talk only about climate change. I think they're all equally important. So I think that kind of driven our volumes up on ESG-labeled issuances. So a lot of the issuances that we've seen in the region, I think over the last 5 years, we've seen doubling in numbers, where issuers such as, let's say, you know, to name names, FAB, EMBD, DP World, Taqa, they've all issued in green format or in sustainable format, trying to promote this ESG-labeled issuance, which in turn promotes or cements their, you know, commitments, their sustainability commitments. So I think all in all, ESG has been very thematic, and it will continue to be. So hopefully the same for the IPO market.
Absolutely. I think there's shifting culture or way of doing things. Now we're seeing shifting, actually, we're running out of time, unfortunately. Many of the people here in the audience or who will watch, I think, this panel, they are institutional investors. And Alan, the question to you, what attracts institutional investors to the MENA region? What should they be looking for?
Yeah, good question. If there's any institutional investors out there, including Frank Templeman, Talim have no plans to introduce Scandinavian teacher salaries to our profitability. Look, I have the pleasure and honour of meeting investors across the world, represented DFM in London and New York, and I can confidently answer this question, and it is of both of the gentlemen on the panel, Basil has given the exact figures, and Simon, it's the return on investment. It's there, it's clear. There's a fantastic opportunity. There's capital here in abundance. There's political stability, and that's the one that really comes through when you're speaking to international investors. Look at the performance of the Abu Dhabi Stock Exchange and the Dubai Stock Exchange compared with, you know, America and London, etc. over the last year. There's actually a real and genuine excitement when I speak to international investors about the UAE and the performance of the UAE. And whatever the geopolitical situation or the local political situation, the UAE government do amazing work to steer through stability, and credit to the government on that. The final one that I would add is the potential for growth, not just in the UAE, but in Saudi. For us as an education group, look at the statistics on the growth of a youth population. If you look at, say, America or Europe, or the reverse of the one-child policy in China, you're seeing an incredible population growth.
Yes.
And population growth is always going to be good for strong GDP and strong economy. And for us, the statistic is 65,000 young people are expected to come in to the UAE alone in the next 5 years. And for an education group, there can be no better economic environment to be working in.
Yeah, absolutely. Basil, what's your perspective from talking about emerging markets institutional investors? Is it the same?
Yeah, let me try frame that in an emerging markets context. Look, I think today global markets have a huge degree of uncertainty. There's disagreement about the pace of rate cuts, coupled with a challenging growth environment. I think that suggests further volatility ahead. When you look at emerging markets, China has its own set of problems. It's dealing with deflation, weak consumption, a real estate glut, and a private sector that's having a capital strike. So in that context, we think that there are really two themes that shape emerging markets this year. The first is interest rate normalization, and that applies to countries like Brazil and like Mexico, where very high real rates have scope to come down quickly and create a tailwind for those equity markets.
Yeah.
The second set of countries really includes countries like India, Indonesia, Vietnam, and in our view, the GCC.
Yes.
And those are stories that can have and sustain structural growth amidst economic stagnation and in a growth-starved world. So I think those are the multi-year structural growth stories. So in terms of the appeal in that context of the GCC, I think it offers investors economic resilience on the one hand, backed by high sovereign assets, low government debt, but it also provides that growth, which is really being unlocked by economic, capital markets, and social reform.
Yeah.
And so if we look at sort of consumption or consumer-facing industries today, they're all being boosted by greater participation of females in the labor force, by increasing an attraction of talent from long-term residencies. And then at the same time, you've got investment-led growth, which is being supported by governments through expansive fiscal policy, large government spending. So really it's these government objectives to diversify their economies that are captured in very clearly defined and ambitious growth plans that is attracting new money into this region and likely to sustain. I would say that Simon's point today is very much accurate. As it stands, emerging markets investors have limited exposure to the GCC.
Yeah.
But we do see signs of that changing as those opportunities become more recognized by AIM investors.
Absolutely. Actually, mentioning Simon. Simon, question to you, and briefly, we're running out of time, unfortunately. What strategies do you feel can work or apply to the Middle Eastern capital markets to sustain growth, to get us into a better place?
I think the thing to remember or to think about is, why do you want capital markets? And I think it's a bridge between pools of capital and people, companies that need that capital. And I think the need is most acute maybe in Dubai and in Saudi Arabia, where they have ambitious plans, they have growth needs, and they need the money for it. Money is abundant, I think, in Abu Dhabi. I don't think there's any disagreement with that. But in some parts of the region, money is less abundant. And so capital markets can bring in capital to fund, say, the Vision 2030 in Saudi Arabia, whether it's equity or it's debt. And I think debt is really going to develop in Saudi Arabia in particular over the next sort of 5 to 10 years. So what can governments do? What can companies do? I think it's be honest with yourself about why you need a capital market and what you need to get that money in. It may be, you need to be transparent, right? You need to say, as a company, as an issuer, what you're using your money for and how you're going to spend it. And that will bring money in. And then from a regulator's point of view, as I say, cut the costs, cut the red tape, and then people will come.
Absolutely. And to wrap up with our question, bonds market, I would like to know more, like the status of investors in this market, briefly, Noor.
I think what Bassel said kind of applies to the bond market as well. EM is a big universe, but they all have their own issues. So MENA or GCC in specific is seen as, I'm going to say GCC in specific, is seen as safe haven to put your money.
Yeah.
Luckily enough, I think a lot of the EM money actually comes into the GCC. There's a lot of reasons for it, including index inclusions, a lot of efforts that have been done by the governments around here to make sure these bonds that they issue end up in an index which attracts even more funds. But as Simon mentioned, there's a huge scope for debt to grow over the next few years, especially in Saudi, to fund their Vision 2030 projects. So I do think that, EM investors have looked, they have this pool of funds. They have a lot of cash this year, thankfully. A lot of them want to lock in these high rates. They're looking at the GCC more than anything else because supply here is higher than any of the other EM markets, primarily driven by, stability, economic resilience, but also by, just being a safe haven versus their prior investments in Asia. And I know I'm a bit over time, but I speak very quickly. China has its own issues, and all these investors that used to invest in China real estates, they need a new place to put their money in, and thankfully GCC is becoming that place for them.
Yes, absolutely, absolutely. I'm sorry we're running out of time. We won't be able to take Q&A questions. Simon, Alan, Noor, and Bassel, thank you so much for the amazing insights. And please feel free during the break to catch up with those amazing talents here to ask any questions you wanted to ask and we were not able to answer. Thank you so much. Thank you, everyone. Thank you.